The recent GameStop mania has spiked the interest of many millennials in the stock market, attributing to 3.7 million downloads of the trading app Robinhood. That's according to data from the app market intelligence firm Sensor Tower. We spoke with a financial expert who shares more insight on the volatility of the stock market. Harry, thank you for joining us today.
Thank you for having me.
The artificial increase in the market performance of some declining companies like GameStop and AMC, how does a retail or individual investor protect their money?
Well, number one, they have to figure out if they're actually participating themselves in something like this. So if they have any kind of 401k or investment holdings, they can kind of see if some of these stocks that they have are in that mix of allocation that they have, or if they themselves are actually participating, in these, Reddit forums and investing and trying to take advantage of what's going on. They then, have full transparency themselves.
Is there something to be said about how much power social media platforms have in influencing the market?
Yeah, I think this is a really new phenomenon. Basically, when things like this happen, it's an inefficiency in the market. And Wall Street, I don't think, was quite prepared for it. So I think what's really happening right now is that the average investor that's out there, we're really able to take advantage of this inefficiency. And I think long term, maybe this type of an opportunity might not be as dramatic. But certainly, I think that, Wall Street and mainstream, hedge funds are going to be paying attention to actually what's happening with these various forums.
What lessons should be taken from the trading frenzy?
Well, I think if you're on the wrong side and you got in maybe too late and you lost a lot of money, I think the one thing that you really want to be careful of is investing money that maybe might be used for retirement planning, or if there's any other goals that you might have, whether it's buying a home, educating your kids. You certainly don't want to be using that money for things like this. So you want to just make sure that, there may be an opportunity, but you certainly want to be careful with where you're actually investing the money from. Again, if it's a retirement account, you want to just be very, very careful of using those types of assets.
Share with us some best practices for good investing for millennials and older generation.
Well, millennials, again, it just really depends on the stage they're at right now. Do they really want to use this money for a purpose? Okay. Are they using it for education? Are they using it for buying a home? So you just have to be careful, because if these investments don't actually perform and they drop drastically, it can significantly impact. Although millennials can use things like Roth IRAs, which are really effective ways from a tax standpoint. So if they wanted to take a little bit of money and maybe try to invest in something like this, that could be a great long-term play for them, especially from a tax standpoint. If you're older, I would maybe be very, very careful. I would use, maybe money that's very discretionary, that it's not going to have an impact on retirement planning objectives. And if there is a gain, they can benefit from that. But if there is a loss, it's not going to be significant. This type of trend, what's happened out there with GameStop, and this is all very short term. So if you are out there and you want to invest more for the long term, you probably want to look at opportunities where maybe the fundamentals of the companies are there and they warrant a long-term investment.
Turning our attention to the COVID-19 pandemic, what are you hearing from your clients? What are some of the biggest concerns?
Well, number one, I think, is the obvious one, is the amount of money that's been, printed and produced monetarily and fiscally, and another bunch of money is being produced right now. And so what's happening is that people have to be very careful about inflation. There's going to be a ton of inflationary pressure here. And there's also a little bit of instability. So people are a little fearful with low interest rates being as low as they are. I guess over the next 3 years, they're predicting it to be close to zero, the Fed announced. So I think, people are looking for a safe place to put money. They do want growth, but they have to also be very careful of losing out or really their nest egg dwindling from a mistake.
Great. Harry, we're going to leave it there. Thank you for joining us.
Thank you very much for having me on today.
That was Harry Abrahamson, CEO of Abrahamson Financial Group.